I don't like the banks, and I look at the XLF, and it looks like a double top to me perfectly from back before the crisis. So we had peak earnings back then, you had peak leverage, you had 30-to-1 leverage. That's not coming back, and I think that's why a lot of these banks did so damn well, is because they had 30-to-1 leverage. If that was their key money maker back then, that's not coming back. Regulation is not lowered to the point where you're going to see these banks run much further from here. I'm shocked that we still have up days in the XLF. I would be a seller.
I'm with you though, Steve. If you look at the financials chart, it looks a little bit better than just the bank charts. The bank charts are still making those lower highs. And again, it's hard for me to get really excited about the banks. I understand the valuations there. I talked about the economy still being okay, but it's hard for me to see a real economic acceleration that steepens the curve enough to really be a catalyst for that valuation re-rate. So still not feeling great about the banks here.
Well, in financials, if you're looking at the XLF, we know there's some other big positions in there that aren't money center banks or regional banks, with Berkshire, whether it's Blackstone. So the outperformance of especially a Blackstone tends to skew some of that. But look, the question is today's news at Wells Fargo, to me, is it a catalyst to see a re-rating for a stock that's obviously derated substantially? Remember, this company used to trade at a premium, certainly to the other money center banks. And I don't think so. I think there's so much jury still to be proven. Let's lead with actions. Let's lead with activity. Let's see if you can actually win back the trust. Because right now, this company should be trading at a discount, and I think it will continue to.
They're still in.
Sometimes you wind up with somebody who you might not have thought of as that great, and they wind up being a star. This guy might be it. But to the earlier points, banks have already had a huge run. I mean, Citi's gone from 61 to 70 over the course of a couple of weeks. So they've been trading instruments. I think you continue to trade them. I think Citi reports October 15th. I think you sell it into earnings.
All right.